It was the same issue for oil as for stocks in the first quarter. For the first part, we hovered in the 20s and then things changed. Jackie DeAngelis has more on the reversal in oil.
A bumpy quarter for crude oil prices. We saw crude go down to that $26 level for the second time before it rebounded back to $40. The dip attributable to the global supply glut. The bounce back due to rumors in the market that a production freeze could help stabilize the market, and hopes that the summer driving season will start to boost demand. But even if global producers meet in Qatar on April 17th, can a consensus be reached? And would an agreement to freeze production at current levels be enough to support oil prices?
I would think there's a freeze now. That should be enough. Now, granted, that means that the demand must increase here, which is something I am expecting in this driving season that's coming up.
Freeze or no freeze, the fear at the moment is that producers will feel comfortable pumping more in a higher price environment, only to drive the market down again. And if history is an indicator, last year prices fell in June when stockpiles were little diminished. Summer driving demand wasn't enough to balance supply and demand overall. And consumers are feeling the recent spike at the pump. AAA says the national average is hovering back around $2 a gallon, up more than a quarter from a month ago.
I think the gas prices could rise a bit over this driving season, but I don't think it's going to be anything that's going to discourage motorists from using, more gas, let's say driving a little more. This is still a big improvement over the last couple of years as far as their costs. So I would say this is a positive gas season, and there will be extra consumption from previous years.
But investors and analysts, they're remaining cautious. They say the run-up in crude oil prices, more than 20% in the last month alone, leaves little room to run.